And we are back talking about Kenya macro figures. We've touched on inflation. We've also touched on the monetary policy conversation, which is where we stopped at when we took a break. We've also looked at GDP. This week, we were expecting the second quarter GDP numbers. Those are not yet out, but we'll certainly cover this once they come through. Joining us in studio to understand the macro outlook is Reginald Kadzutu, who is an economic analyst. Reginald, welcome back to the show.
Thank you.
Before we took the break, we just got into talking about the banks, and the CBK is saying that a certain percentage of loans have been restructured and the non-performing loan ratio is increasing. Please give us your take on this.
I think we should be worried because when 38% to 40% of the loan book of the industry was restructured, and we knew restructuring came because of COVID. Ideally, banks should have actually categorized those loans as potential non-performing or non-performing based on IFRS 9, the stringent IFRS 9. And ideally going forward, the banks also need to, because IFRS 9, the new IFRS 9 is more forward-looking. What do you anticipate that your loans as the non-performing are going to be, and you're supposed to provide for it. And if you've noticed, most of the prudent banks upped their provisions drastically.
And that's why we're seeing almost like KCB, the numbers were down 39%, largely because of provisions.
Exactly.
Right.
So and once a bank makes a provision, that means in their intelligent or wise forecast is that these loans are not going to, we're not going to get these loans back. And most of the times they are not even that honest themselves. They have to remain with some optimism. So if you look at the sectors that restructured the most, which is the tourism sector and personal loans, those are the two sectors that restructured the most. And you think by the end of the year, will anything will have changed in those areas? And I doubt it. Tourism is not going to recover until 2022. And with our record of violent elections, we might also just have to count out 2022 in terms of recovery. We're getting to 2021, a year before an election where people are thinking, no, this election does not seem like it's going to be very calm, as in campaigns have already started.
Yes,
they've already started, and we are 2 years away from the election. Any prudent business would rather be cash rich than expand in 2021. So that means we're not going to see so much increase in employment come to 2021. So if I had lost my job, the chances of getting another job may be very high, and I've restructured. So I'll come to December, you can't restructure anymore.
Exactly.
Central Bank has said now you can start listing people in CBR, in CRB, and I'm thinking, so what have you done?
Exactly.
Because all those names which were packed will now just all fill CBR in the next 1 month. There's literally nothing you have actually what you did with that, because if people were restructuring, definitely you're not going to be listed in CRB. But now when you remove the restructuring, this is now where do not put anyone in CRB would make more sense. So the outlook is that most of these restructured loans, either the banks will have to restructure them again, which I don't think they will do, because then if a loan is not giving you even interest, then it becomes non-performing in all intents and purposes. And if you borrow little money, the bank can stress you, come and attach an asset or whatever. But the people, they have lent upwards of 1 million, 5 million, 10 million, 100 million. The bank is the one that is in a problem. Because if I say can't pay, won't pay. That's the bank that is whatever. And if a bank like KCB or Equity, any one of them announce a loss, trust me, with the impact Kenyans have gone through with collapsed institutions, collapsed financial institutions, there will be a run on that bank. And if you look at the capital adequacy, as much as the central bank governor says it's okay. It's okay based on, I don't know what stress test they've done. Because if you look at the shareholder funds that KCB has or Equity has, and we say if they get a run on 60% of their book, they're done. As in 60% of the guys come for their deposits. They are done.
Yes.
And that's the truth of the matter.
All right.
So the central bank needs to do literally what the US did during the 2008-2009 crisis. Sit down and do stress tests. If the worst is to happen, how many of these banks will survive.
Okay.
And start calling out, if there are banks that they need to call out to recapitalize,
Yes.
they need to start doing that now.
Actually, that's what I wanted to get into, because I was saying on one end, there is a large chunk of the existing loans have been restructured. There is an upward surge in terms of non-performing loans, and it's expected to increase. But conversely, on the securities exchange, you're still seeing demand for the top tier banks. So Equity Bank, it's still pricing up. It's at the 36 shilling mark. It went all the way from 28 shillings per share. KCB, it's also 37, 38 shillings per share. It came down from 30 shillings per share. And it's interesting because when you look at the NSC, you can only see the top tier. Like the movement we've seen in price and activity has been Equity, KCB, Equity, KCB. At times you'll see a bit of volumes go through on Cooperative Bank, a bit on APSA. But the second tier and the third tier, there's just nothing happening in that space. So could that be reflective of exactly where the restructurers are coming in, and our investors saying, okay, we understand what's going here. We're either going to go big or go home, because we can understand the outlook for the lower tier banks, as the tier 2 and the tier 3s. Is that a way of looking at it?
If you look at what's the name of this bank? Is it called CDN? ECB is the one that tend to CDN. Eh? Yes. Where was it close to 70 or 80% of the loan book was non-performing?
Yes.
Because if you look at lower banks, the type of loans they give, they're giving loans to SMEs, they're giving loans to individuals. So if a bank like KCB and Equity are getting such hits, you'll just shudder to think what is happening on these other guys who are not as capitalized as the big ones.
Understood.
But definitely in terms of foreigners or institutional investors, they will rather stick to your Equity KCB. As I've mentioned, they need to stop calling it Nairobi Security Exchange to Nairobi 6 Exchange.
Because
what else do you invest in if you're not investing in the top 6?
If it's not the top 6, there's nothing much.
There's nothing else that you want to
that's
put
happening
in.
there.
Exactly.
Okay.
So the market is driven by those 6
NSE
counters.
top 6, that's a good
top
one.
6 and just
move to other things.
Yeah, on the other side, yeah.
All right, let's go back to the final thing when we're talking about macro. Now, the outlook of interest rates. What's your take on this?
And unless the central bank reverses the CRR directive, banks are super liquid right now. And them being super liquid, as long as you have interbank rate below 3%, I do not see interest rates going up generally in the market. And unfortunately, this is not passed down to the rest of us, the borrowers. Banks will still maintain lending to you at 12-13%.
Exactly, that's already like a 10% margin that they're making.
Exactly, that's how banks make money. In Kenya, they're literally hawks in terms of that. And so you'll find interest rates in the interbank market and in the wholesale market will remain depressed unless central bank increases cash reserve ratio up again. In the first place, I don't even know why it was reduced, because we didn't have a liquidity crisis. We had an income crisis, and it was not a liquidity crisis. So if I don't have an income, I'm not going to come and borrow.
Yes.
And when we have an issue of an income crisis in the economy,
maybe
the bank
it was an income to avert an income crisis for the banks.
No.
In terms of adding options, but anyway,
so I don't see interest rates going up.
Yes.
They will remain range band they are.
All right.
Even if central bank comes and says now 8%, the only thing that will happen is that the loan rates will go up, but deposit rates will remain, and you earn when you place your money on fixed deposits.
Okay. But then what's the outlook though for fixed deposits and fixed interest investments? So Treasury bonds, where do we see? What is the outlook when we're thinking about
they'll still remain depressed because there's excess liquidity.
All right.
Banks are not going to lend out because the risks are so high. So the only other option they have of making money is to buy treasury bonds. So sometimes when you look at hindsight, you realize even this CRR was not for the rest of the economy.
Exactly.
This CRR was just, they needed to borrow, they needed to pay loans. So where best do you get this money? Flood the banks with money. You know the banks are not going to lend to anyone. Then you come back to them and you tell them, I'm going to borrow from you for 10 years at 7%. Yes. The bank will think 7% or nothing. And
so
they take
just do it.
Yes.
Exactly.
And that's how they've been pushing down interest rates.
Okay.
It's a game they can only play for thus far, because you can do that on the domestic front, but on the external front, if they don't get another huge influx of a dollar loan, we will not reach June next year.
But it's interesting because now when you take that perspective, we are also seeing some of the big brothers or the likes of World Bank and IMF, and the latest commentary is focus on borrowing locally, right? So there's also just that shift of there's a lot of liquidity in your country. You can use that to lengthen the maturity of your yield curve. So there's a shift into that. But that's a conversation that we can take on another day. As we come to the tail end of this conversation, Reginald, we've talked about the interest outlook, we've talked about inflation, we've talked about GDP, we're still waiting for those numbers, and we've really just talked about the economy in general. We are at the beginning of a new month, the final quarter for the year, thinking about next year as well. From where you sit, how do we then allocate funds today, at least for the short to the medium term, based on all the factors that we have looked at today?
Depending on whether you're a short-term or long-term investor, if you're an investor who doesn't have so much funds, then try and get the benefit of a compound interest.
Okay.
So put it in the money market and try and compound it as fast as much as you can to get as much interest as you can get. If you're a longer-term investor, buying government securities now is good because they cannot keep on borrowing at these rates. So borrowing on the short term of the yield curve. If you borrow long term, if you buy a 25-year paper, trust me, the next 25-year paper that is going to be issued is going to be most probably 300 or 400 basis points higher.
It's actually there's one that's in the market.
Yes, exactly, and
yes.
you'll find yourself with a paper loss.
Yes,
because your bond price will drop because there's a paper with a higher rate that has been issued.
Okay.
Again, if you are long term into equities, I would not tell you to go into the banking sector right now, as in try another sector apart from the banking sector, because we've not seen the worst of what is going to happen in the banks. But remaining as much as liquid as possible to take advantage of opportunities that will come will be the best investment decision that you can make. So which now makes the money market, as much as the rate is low, you can get 9-10% rate from a credible money market fund. Please, anything above 10%, you are just throwing away your money.
You're throwing away your money.
So 9-10% is good, considering inflation is at 4.3%, 4.2%.
Yes.
So you're just earning at least an average of 6% on that.
All right. So the final thing on the money market, I know you've said that it needs to be a credible, a 9% return is more or less okay. Is there anything else that you would advise somebody to look out for? Maybe one or two things when you're trying to pick a financial partner, especially in the money market space?
I always say look at management, because all these vehicles are highly regulated. Unfortunately, sometimes our regulator sleeps on the job. But if you notice anything that happens with a fund, you can trace it down to management. So who is the fund manager? Yeah, so yes, I'm putting my money in Britam, I'm putting my money in CIC, Sanlam, Old Mutual, ICA, and all these guys. But who is actually managing the money? How competent are they? What are the internal governance structures they have there? Do they have a strong investment committee? And what's their track record? I think those are things to actually look at before you put your money with anyone.
Okay, fantastic. So we've come to the tail end of this conversation. It's a new month. Happy new month.
Thank
you. Do you want to leave our audience with a happy new month investing tip before we go?
Don't fear taking risks. Risk is the only thing that brings return.
Yes.
Anything without risk has no return. So if someone tells you there's a high return and they have no risk, that's a Ponzi scheme. It's a Ponzi scheme. Yeah. Fantastic. Thank you so much. That was a very interesting conversation with Reginald Kazutu. We were looking at the macros. We were hoping to evaluate the second quarter GDP numbers. Those are still yet to come out. But when we are looking at the economy, everything is a bit stable, seems, but there are a bit of risk factors to look out for in certain sectors. Tourism is a key sector. Banking, with the restructure of the numbers that are coming through the banks, that's certainly a point of risk for you to consider. But this whole conversation just tells us, as you're getting into the new quarter and into the new month, there is an opportunity and space for you to make a decision and take a calculated risk. Without a risk, there is no return. With any return, there is a risk. So ask the right questions, get the right information, watch us each and every single day so that we can be able to make that decision so much easier. Tomorrow is Friday. We dedicate a good amount of time just for your benefit. It's our Ask Bithe segment, where I want to have a one-on-one with you. I would love to be able to sit with you, but for today, we can only engage if you send us a message on our SMS line. That's 20146.
If that's not an option for you, my name is Mbithe Mwema. You can find me on Twitter, on LinkedIn, on Instagram or Facebook. Send me a message. I have gotten a few messages from you, from some of our viewers, and I will be answering them tomorrow, but there's always room for more. So let's hear what you want to say hello to us, ask us an investment question. Let's try and see how we can be able to improve our investment outlook for the final quarter. That's all we have for you today. See you tomorrow, same time. Good afternoon.